Welcome to TradeTheMBI.com. This is John. This report is for the 9th of November. Well, it was a pretty modest day. Every retrace back to that 50% just created buying opportunities that pushed just to a slightly positive edge on the move. It's interesting that caused a bit of a fade in the MBI Magenta, and we're seeing a pretty significant drop off pretty quick. We'll see if that maintains itself. A push up by the close today, that could be enough to stave that off a bit. But we also saw in the DOC2 here, short activity increasing, sort of like a momentum stall. But again, as long as you're above that 50%, still fairly clean. Shakeout continuing to rise in the positive zone, but a rollover here of the DOC red that could be problematic. We still haven't seen a full reset of DOC steel, though the fact that it's potentially going to close underneath the cyan, that would be a significant move that little short-term buyer reset has taken place. And it's still right in time for still all that new fund money to be put into action. We kind of stalled a little bit here, and that's normal after this kind of run. I think it's a little more positive when we look at it from an NQ standpoint, but also a similar move from that direction. You still don't have any MBI white over magenta at this particular stage, so it's not impeding anything from the bullish stance, and it's a little bit softer from a DOC read. Not quite the same, but again, the day isn't over, so at that particular point, we'll see at the end of today whether or not we get that significant crossover, and that could be a little bit of an impediment towards pushing forward. And of course, with treasuries continuing to fail in the yield situation, bring it back more into line with where current rates are. You can see that the market pushed below, a little bit too optimistic too early as far as thinking that the Fed was going to be forced to continue its tightening in that. And, a lot of that's going to be related to oil, and it continues to drop, which eases off the inflationary pressures, which will actually promote growth. And that is going to be concern for the market from a propulsion standpoint, at least, because it means the Fed is going to not be forced to do anything unique. And even if they hold the line where things are, which I think they should anyway, simply because it's going to sustain the ability to absorb the rate increases that have taken place. And if that's able to do that, could be enough to prevent things from fading further south. But the oil move, real significant. And then a lot of this is just due to the fact that the Israeli conflict, as well as the Ukrainian situation, really haven't resulted in a broader escalation. Now, should that change, of course, that's a huge negative. And as long as things remain soft, it's that fear creep higher, as we say, and particularly with the bullish nature of where we're at the end of the year. Typical euro, of course, holding on to its nice little propulsion back over there. But again, any of these changes would definitely have a negative impact. So it's worth noting. Gold continuing its retrace, and literally just filling back positive extremes, which we talked about. It still has a little further to go to fill that. If it does, that's sort of normal, and probably a move back towards the 50% would not be out of line within that configuration. But what we are interestingly seeing is the continuation of crypto movement moving higher. And so it's that alternative space that is still starting to attract a lot of attention as it pushes back. And this could be a significant move because still zero activity from a short. And, ever since the buy signal that came back down to 28, you're nearly 10K higher coming off that. That's a significant propulsion. Same thing with ETH. It had lagged before, and it's catching up to that. So starting to get an evening out there from a crypto standpoint, certainly outperforming where the market is by far. And from a 50K, you can see the stall as it has reached this peak. And of course, the downside dangers are real. They represent significant retrace numbers. Almost 150 points lower on the S&P for fill of those positive extremes. And of course, don't expect that until we actually get some kind of impetus, or at least an indication that the signals have changed. From an intraday standpoint, you can see we ended up with a fairly medium-sized downturn until middle part of the day, and then it just moved up right back up to previous highs. So it wasn't anything too dramatic. Finished a little bit softer on it, and at this particular stage, just some back and forth within the intraday, but a little bit of a positive run at this particular stage, but all on positive extremes. So it's just filling back in there. But overall, market's holding on, and not anything that surprising in any way, shape, or form. Just that the momentum maybe has faded just a little bit from the run. But it wouldn't take much to get another round propelling now that we're seeing some short activity. So that's really what we'll be looking for, is to see that press. But any close below 50% on our Fibonacci lines there from a daily standpoint would certainly be a concern, at least for the momentum of a rally taking place. So at this particular stage, we're just going to have to continue to follow the regular readings and not expecting too much of a huge range change at this particular stage. As always, though, I will continue to update on the Skype chat. Have a good one. Trade well.